Hey everyone, and welcome back to the channel. Today, we're diving deep into one of the biggest names in tech, Alphabet, ticker symbol Google. We're going to break down their stock performance, their huge shift into AI, and what it all means for you, the investor. If you own Google or are thinking about it, you won't want to miss this. Visual, Alphabet logo, Google ticker, text overlay. Stock analysis, Alphabet Incorporated GOGL. First off, let's talk about a massive transformation. Alphabet isn't just a search engine company anymore. They've strategically repositioned themselves as an AI-native conglomerate. Think about it. From Google Search to Google Cloud and even their self-driving car company, Waymo, their powerful AI models like Gemini 3.5 and 4 are now woven into everything they do. This isn't just a tech upgrade. It's a fundamental change in how they operate and innovate. Visual, animation showing, search engine, transforming into AI-native conglomerate. Gemini logo prominently displayed. Text overlay. From search to AI powerhouse. And this pivot is paying off big time. In 2025, Alphabet crossed a huge milestone, hitting over $400 billion in annual revenue. That's a staggering number. They've emerged as what analysts call a defensive growth play. What does that mean? It means they have a dominant, almost monopolistic position in core areas like search, giving them incredible stability, plus explosive upside potential from their integrated AI businesses. Visual, large text on screen. $400 billion annual revenue in 2025, accompanied by a rising graph icon. Text overlay. Defensive growth explained, stable core plus AI upside. So where is all this money coming from? Alphabet organizes its business into three main segments. First, we have Google Services. This is their bread and butter: Search, YouTube, Android, Maps. It's still the biggest revenue and cash generator. Interestingly, instead of AI hurting traditional search, the introduction of AI overviews has actually led to more user engagement and higher-value search queries. People are asking more specific, complex questions, and Alphabet is capturing that value. Visual, screenshot of Google search results with an AI overview box. Text overlay. Google Services, the core engine. And YouTube? It's a beast. By the end of 2025, YouTube's annual revenue exceeded $60 billion, thanks to both ads and over 325 million paid subscribers across Google services. But here's the game changer: the Universal Commerce Protocol, or UCP. Imagine searching for a product and completing the purchase directly within Google Search, without even leaving the page. That's search to settlement, and it's a massive step into what they call agentic commerce, where AI helps you shop seamlessly. Visual, YouTube logo with subscriber count, $60 billion plus revenue, 325M plus subs. Animation of a shopping cart appearing in a search bar, then checking out. Text overlay. Agentic commerce, shopping with AI. Next up, Google Cloud. This segment has truly become a high-margin profit engine. In late 2025, its revenue surged by 48% year-over-year, and its operating margin dramatically expanded to over 30%. This isn't just about storing data. It's about providing the powerful infrastructure for other businesses to train and host their own AI models. Google Cloud is no longer a loss leader. It's a massive moneymaker. Visual, cloud icon with upward-pointing arrows. Text overlay. Google Cloud, profit engine surges. 48% revenue growth, 30% plus margin. Finally, there are other bets. These are Alphabet's moonshot projects like Waymo, their self-driving car company. While this segment still reports losses overall, Waymo is finally showing commercial traction, attracting a massive $16 billion investment round in early 2026. These other bets are where Alphabet takes big swings for future disruption. Visual footage of a Waymo self-driving car. Text overlay. Other bets. Moonshot Innovations Waymo. Alright, let's talk numbers. Over the past 5 years, Alphabet has consistently grown its revenue from $257 billion in 2021 to over $402 billion in 2025. What's even more impressive is that their net profit has grown even faster, showing improved efficiency and the high-margin nature of their AI products. In the last quarter of 2025 alone, revenue hit nearly $114 billion, an 18% jump year-over-year. That's some serious momentum. Visual. A clean table showing Alphabet's annual revenue and net income from 2021 to 2025. Text overlay. Impressive growth, revenue and profit acceleration. Now, for dividend investors, here's a significant piece of news. In 2024, Alphabet started paying a quarterly cash dividend. It's a modest 21 cents per share right now, making the yield quite small, but it's a powerful signal of the company's confidence in its long-term cash generation. They also continue to do share buybacks and boast a fortress balance sheet with over $126 billion in cash, allowing them to self-fund their massive AI investments without borrowing. Visual. $sign icon with a small plant growing out of it. Text overlay. New dividend policy. A sign of maturity. $126 billion cash reserves. When it comes to competition, Google is still the undisputed king of search, holding about 90% of the global market share, even with all the new AI rivals. Their integrated ecosystem of YouTube and Android creates a powerful network effect that's incredibly hard to beat. Visual. World map highlighting Google's search dominance. Text overlay. Search dominance. 90% global market share. In the cloud space, Alphabet is number 3 globally, behind Amazon's AWS and Microsoft's Azure. But here's the kicker. Google Cloud is growing at a much faster rate, surging 48% in Q4 2025. They're rapidly gaining market share, especially in catering to large enterprises for AI infrastructure, boasting an incredible $240 billion backlog of future cloud revenue. Visual. Bar chart comparing market share and growth rates of AWS, Azure, and Google Cloud. Text overlay. Cloud Wars. Google Cloud's rapid ascent. Looking ahead, Alphabet is investing heavily in the inference era of AI, meaning making AI models widely usable in everyday life. We talked about agentic commerce, where AI agents can find and buy products for you. And the upcoming Gemini 4 is expected to have PhD-level reasoning and 3D understanding, potentially letting AI manage entire business processes autonomously. These are huge bets on the future. Visual. Animated graphics showing an AI brain thinking, then interacting with a digital world. Text overlay. Future growth, agentic commerce, and Gemini 4. But it's not all sunshine and rainbows. Alphabet faces significant regulatory challenges, a multi-front war, as some call it. They've dealt with antitrust cases in the US and are facing ongoing pressure in Europe over their Digital Markets Act compliance. There are real risks of forced changes to their business model or hefty fines. Plus, the sheer cost of building out this AI infrastructure, projected at up to $185 billion in 2026, is a massive investment that needs to pay off. Visual. Gavel icon and a warning sign. Text overlay. Key risks, regulatory headwinds, and high AI investment. Finally, a quick note for potential investors. Alphabet has 2 main publicly traded stock classes, Google Class A and Google Class C. The key difference? Google shares come with 1 vote per share, while Google shares have no voting rights. Founders retain majority control, through a separate Class B share. Historically, Google trades at a slight premium, but for most retail investors focused purely on capital appreciation, Google is usually the simpler and equally effective choice, as the prices generally move in tandem. Visual: simple table comparing Google and Google, voting rights, economic benefits ticker. Text overlay: Google versus Google. What's the difference? So what's the bottom line? Alphabet in 2026 is a unique beast, a dominant legacy business combined with a high-growth AI conglomerate. It's a defensive growth play with an unassailable moat in search and video, an exploding cloud business, and huge potential in AI-driven commerce. While regulatory risks are significant and the AI race is capital-intensive, Alphabet's strong balance sheet, proprietary technology, and massive distribution channels give it incredible resilience. It remains a core holding for both growth and value portfolios. Visual: Alphabet logo with strong buy or core holding stamp. Text overlay: Final takeaway: a resilient AI powerhouse. What are your thoughts on Alphabet's AI transformation? Let me know in the comments below. Don't forget to like this video, subscribe for more insights, and hit that notification bell so you don't miss our next deep dive. Thanks for watching, and I'll see you next time.